Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 15th of April. Has China stabilized? The Chinese economy slowed somewhat in the first quarter, but it began regaining some of its lost momentum in March. It seems that even though the global financial volatility during January and February took its toll on the quarter's overall growth, economic activity may have stabilized towards the end of the quarter. GDP growth decelerated to 6.7% year-over-year in the first quarter from 6.8% year-over-year previously, while industrial production, fixed asset investments and retail sales all accelerated by more than expected in March. In our view, this provides a glimmer of hope to global investors and Chinese policymakers that the nation's recent hardships may be drawing to an end. We therefore believe that the likelihood for any further near-term easing by the People's Bank of China is now considerably lower. This could lead investors to regain some of their risk appetite, as China's slowdown was one of the main drivers of uncertainty around the global outlook. Such a development could cause commodity currencies such as the Aussie and the Kiwi to gain, while it may curb some demand for safe havens such as the yen and gold. Nevertheless, although this bunch of data is encouraging, we remain skeptical on whether the momentum of the economy gathered in March is sustainable. As a result, we will take this data with a grain of salt for now and wait for the upcoming data to draw safer conclusions on whether China's economic activity has indeed stabilized. Yesterday, the Bank of England remained unanimously on hold and offered more warnings on the potential adverse effects that the referendum uncertainty may have on the British economy. The bank signaled that GDP growth is likely to soften in the first half of 2016, weighed on by delayed investment decisions and signs that demand may have started to moderate. Furthermore, officials noted that the referendum effects may make macroeconomic data harder to interpret, suggesting that most of the indicators we get in the run-up to June may be of secondary importance for the bank. We believe that the Bank of England is likely to keep its rate powder dry, at least until the vote has concluded. We will therefore continue to monitor incoming polls as trackers of sterling's short-term direction. As these polls currently suggest a race almost too close to call, we expect that uncertainty will continue to intensify in coming months, something that makes us hesitant to trust any GBP rallies heading into the ballots. As for today's indicators, we get data only from the US and Canada. In the US, the Empire State Manufacturing Index for April is forecast to show that New York's manufacturing activity continues to improve. Industrial production for March is expected to have continued falling, but at a slower pace than the previous month. The preliminary University of Michigan Consumer Sentiment Index for April is also coming out, and expectations are for a rise. An improvement in all of these indicators could add some fuel to this week's dollar rally. From Canada, manufacturing sales for February are expected to have fallen from previously. The forecast is supported by a significant decline in the IV PMI for the month. Although this is usually not a major market mover, a sharp fall in the figure could cause the loonie to reverse some of its recent gains. The only speaker scheduled for today is Chicago Fed President Charles Evans. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, senior analyst at IronFX, wishing you solid trading.